think that the first point that I would make is that we conducted a survey of our investors into their attitudes towards climate change and the issues that were sort of holding them back from adopting a more aggressive or proactive stance. And the concerns that came back to us were twofold, really. The first was around their concern that portfolio decarbonisation didn't necessarily mean real-world decarbonisation, and they weren't sure how to set targets that incentivized asset managers to decarbonise their portfolios in a way that has real-world impact. And the second concern was really around the impact on returns and risk, because investors still have this preconception that investing in a sustainable way, in a climate-aware way, must necessarily involve sacrificing returns, diversification, or both. And so as a consequence of that, I think investors are a little bit hesitant to establish a climate-aware fixed income approach because they're just not sure that it will meet their fiduciary duty. So the approach that we take is slightly different from what you see elsewhere in the market. We are concerned that a number of the solutions that you see are a little bit too ticking boxes. So investors invest in green bonds, tick a box. That means I'm climate aware. I invest in a Paris line benchmark, tick a box. It means that I'm transitioning. We don't share that conviction. Both of those products are important innovations, but they are not solutions to address decarbonisation, and they're not portfolio solutions that can replace an existing fixed income allocation. So the approach that we take is to say, we'll take a regular benchmark, just a global corporate benchmark that you could buy off the shelf, that any investor could manage a credit fund to. And we will seek to reduce emissions significantly by investing in the leaders. And if we do that, we will reduce portfolio emissions very significantly versus benchmark. And then also, we will invest in the companies that are transitioning. So that is the companies that are hard to abate, that are difficult to decarbonise, the cement companies, the steel companies, energy providers, transportation. That adds back emissions into our portfolio. But what it means is that we have that real world impact that is so important. So some of the estimates around decarbonisation, we require something like $5 trillion per year of capital to be deployed into preventing climate change. So you can only do that by providing it to the hard to abate sectors, the high emission sectors, in order to shift their business model away from polluting assets.